Okay, hello and welcome everyone. Welcome to JFD Brokers Traders Tea Time with me, Darius and Anucauskas. Today is the 11th of March 2019. So welcome everyone. Welcome to this Monday's afternoon session where we're going to have a look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, let's quickly have a quick look at the charts and let's see what we can do here and what we can analyze here in the 15-minute slot. So basically, the first index I want to touch on here is the Nasdaq100. Of course, you already understand that the indices, the US market have already opened, and we can see this nice push higher here. Let me just get rid of a few arrows here. So we can see this nice push higher here towards this 7,100 level. So it's currently balancing around this, maybe just slightly a few points below that, but a very good boost here. Now the big question here for us is, of course, will this 7,100 level get broken, and will we see a further acceleration to the upside here? Because for us, let's say, to get more comfortable with higher levels, we would like to see a nice good pop above the recent highs here that we saw here on the 4th of March, and that was approximately around the 7,205 level. So a nice good pop above this level could potentially open, of course, the path towards higher highs. And of course, then we will target the areas like the 7,310 level, which you can see that marks nicely this high that we saw here back on the 17th of October. So this would be our next potential area of resistance, but only if we see a nice good pop above the 7,205 level. Now, don't get me wrong, I do understand it's about 100 points away from this level, but to be honest, for us, it's better to be safe than sorry. For now, you can see that yes, we did have a nice push here towards this 7,100 level, but of course, like I said, let's see how this plays out later on. If this fails to drive above the 7,100 level, then, well, be careful. We could see maybe a slide back down here. And as I've mentioned in one of my previous videos where I was covering Nasdaq, basically we would like to see a nice another drop here below the 7,000 level in order to consider further declines. So basically, for now, it's probably more of a waiting game here, and it is a very interesting index to watch right now and see how it's going to play out. But then again, you can see that how well the 7,100 levels is playing out right now. So that's why, guys, be very cautious with this one, because still the day has just started. If this, of course, continues traveling further up here, then yep, that's wonderful. We will target the R3 here around the 7,150 zone. But we would need to see a nice good strong push away from this 7,100 level, and then again, like I said, and then of course on the upside here, we are keeping a close eye on this 7,200 205 level. So keep your eyes on that one. That's of course in terms of the upside, because if we do get a nice pop here above that level, this could confirm a forthcoming a forthcoming higher high, and then we'll target the 7,310 level. But for now, again, I'll repeat myself. It is a bit tricky here at around this 7,100 level, but continue observing it. But if this suddenly decides to reverse back down and drops below the 7,000 level, then that could be good news for the bears, as we could see this index sliding further down, maybe even actually going towards this 200 EMA shown here as the black line on this 4-hour chart, which would be around the 6,905 level, approximately there. So for now, guys, be very cautious and let's keep an eye on the price action. Platinum. Now this I really like this this commodity, this precious metal, and look how well it acted near its this downside resistance line, and you can see that from this downside resistance line it reversed back down and managed to drive all the way here lower, and is now balancing just slightly below the 815 level. So around there it managed to reach the area near the 809 zone, from which it kind of rebounded, and now this is going to be the level that we're going to be keeping a close eye on, this 809 zone. If we see a nice good drop below this, then this could travel further down towards the psychological 800 level, or even actually retesting this upside support line. Now, don't get me wrong, it is a little bit of a tentative one, because we did have a break below here around mid-February, but you can see how quickly it managed to travel back above it. So basically this level here also played out nicely, the 780 zone, from which the commodity rebounded and pushed higher. So in a way, guys, for now we're just going to go step by step. If we see a drop below the 809 level, then yep, we could be targeting the psychological 800 level, or even this upside support line, and if these won't hold, then yep, further declines are possible as well, at least towards the 780 zone again. But for now, this is where the commodity is sitting at. For us, let's say, to get more comfortable with higher areas, and let me just adjust a few levels here, guys. In order to kind of see further acceleration to the upside, we're probably going to be looking at 821 level, maybe just slightly above that, but this is the area that we're going to be keeping a close eye on. A nice good push above that could lead towards the 831 zone, or even further higher. But again, for now, let's go step by step. There are some good levels above here, some good resistance levels, of course, but in order to kind of consider a push higher, at least a little bit here towards the 831 or 41, we need to see a nice good push above the 821 level first, and only then we will target higher areas. For now, we're just going to remain here somewhat more neutral and continue observing these key resistance and support levels. In a way, also, just to kind of add something additional to this, and to some additional analysis here, if you draw a fib here and just to see where the price is currently trading at, you will see that it's currently sitting just around the 61.8% retracement on the Fibonacci. So basically, very interesting level here. This is going to be very interesting to watch if we see a further slide towards the 78.6%, which is not far from this psychological 800 level that I was talking about as well. So for now, guys, keep your eyes on this one. Let's see how this plays out, and keep your eyes on these levels that I've just mentioned, the 821 on the upside and the 809 on the downside. Brent oil, now looking at this very interesting chart here, looking at this 4-hour chart. Let me get rid of this line. You can see that it managed to travel back to the upside here after touching its 200 EMA, I mean slightly breaking it to the downside, of course, but nevertheless kind of remained trading above this 200 EMA on the 4-hour chart, and you can see that it climbed back up here, managed to get above the 65.65 level, but once again got held near this 66.65 level. You can see how well that level played out in the past, and of course this is going to be that barrier that we're going to be keeping a close eye on, because a nice good push above the 66.65 could potentially open the path towards the 67.35 area, approximately there, guys, and of course then we could target even further higher areas. But of course, in order to kind of consider a higher high here, we would like to see a nice good push above this little high around the 67.70 level, which marks the high of the 22nd of February, or in other words, the highest point of February. So basically, guys, for now, the main thing is to watch here is the 66.65 area. A nice good break above that could lead towards slightly higher levels. If this decides to travel back down here and drops below the 65.65 area, this is where, of course, it would be a bit tricky, become a bit tricky for the bulls. Maybe we could see a further decline lower. The only thing is that we're going to remain still very cautious here, because basically we would like to see a nice another good drop here below the 64.30 area, approximately there, which held the price nicely here from dropping lower on the 26th of February. Of course, we did have this undershoot here on the 8th of March on Friday, but you can see that still kind of quickly the price quickly got back above it and kind of traveled higher. So in a way, guys, in order to be more on the cautious side, a drop below the 64.30 level could be that gateway towards lower levels. And as you can also see as well, this would place automatically the commodity below the 200 EMA, so also could be that bearish indication and a signal for more bears to step in. So for now, this is where we're going to play. This is how we're going to play this game, and we're going to continue observing these key resistance and support areas. So again, once again, on the upside is the 66.65 area, approximately there. So keep your eyes on that one. A nice good pop above it could lead towards higher levels. At least we will aim for these, the 67.70 or the 68.35 area, approximately there. NZDCAD, now jumping into a few pairs now. This is finally moving nicely away from its range that it was trading in since the beginning of January. You can see this nice break here that we had on Friday. On Thursday, we managed to move nicely to the upside here. To be honest, actually, it managed to break it on Wednesday even. There we go. Just small correction of myself, guys. Started breaking it on Thursday, but then of course traveled back down. But you can see on Friday this pair kind of traveled again above this upper bound of this range that that NZDCAD was trading in since the beginning of January, and it remained, and the most important, that it closed the week above that. And of course today we're seeing this continuation push higher. Now we're aiming for the 0.9165 level. We're going to keep a close eye on it because this level held the rate nicely down between this 26th of December and the 1st of January. So we're going to keep a close eye on this one. A nice good pop above this could of course lead towards further acceleration to the upside, where the next very good potential area of resistance could be seen near the 0.9250, and you can see how well that played here between the 5th of December and the 19th of December. So it held the rate down. It didn't allow it to push higher, and didn't allow it to close above that level. So yep, that's where we're going to be looking at later on if we see a push above the 0.9165 level. So let me just quickly put an arrow here just for our future reference. On the downside, well, we need to see this one reversing back down below this below the upper bound of the range here near the 0.9110 level. If we see a drop below that, then yep, further declines are possible. And just to kind of zoom in here a little bit, the areas they're going to be keeping a close eye on, of course, I do have the 0.9060 level, but just slightly above that we do have this little low here of 7th of March, and that's around the 0.9070. So a drop below the 0.9110 level could lead towards a retest of this low here that we saw here on the 7th of March, and that's approximately around the 0.9070 level. So basically something like this could be possible. Of course, if this fails to withhold, then further declines are possible, but for now it seems that the downside is slightly off the table, and let's keep a close eye on the 0.9165 given the fact that we're not far from this level right now. So keep your eyes on that one. GBPNZD now quickly here, certainly a bit of a volatile market here, and of course a lot of volatility today in the GBP currency. You can see that initially we had a nice push higher here away from this 1.9020 level that was reached today. We had a nice pop here to the upside, almost managed to reach the pivot, today's pivot, which was around the 1.9195 level. Just kind of failed of reaching that by a few ticks, and you can see now it's correcting back down. Of course, the big question here is going to be very interesting to watch how it's gonna and where it's gonna end the day according to this 200 EMA here on the 4-hour chart. So for now, It's probably difficult to say exactly, because on one hand it did have a nice push here to the upside. We could see maybe a further acceleration to the upside, but the only thing is we're going to take a more cautious approach now and wait for a nice pop above the 1.9195 level, and only then we will consider higher areas. For now, this is, like I said, it's a bit tricky, because like I said, it initially had a nice push higher, but now you can see that it even failed to touch the pivot, and now it's retracing back down and kind of slightly dropping below the 200 EMA. So for now, keep your eyes on this one. In terms of the downside, similar story, more cautious approach, because we would like to see a drop below the 190.20 level first, and only then we will target lower areas. For now, that's the case. It's better to be, like I said, it's better to continue observing this one, but again, like I said, be very careful with the pound pairs, especially going into tomorrow and Wednesday and Thursday, as we do have huge, big developments in the UK political arena. So that's why, guys, be very cautious with this pair. We could see a very volatile week for the British currency, and we could see even moves in the opposite direction each day. So that's why, guys, be very careful with this one, and probably always have your stop loss in place on this one, and to be honest, on any instrument. GBPCHF, this one is of course the best performer today, because we have a strong pound and a very weak Swiss franc. So you can see that we had a nice push here to the upside, managed to break above the pivot. Certainly this is looking more positive than the GBPNZD, given the fact that it traveled way above this pivot and it actually managed to reach its R1, which was around the 132.10 level. Now, of course, in order to consider further acceleration to the upside, we would like to see another push here above the 132.10 level, and only then we will target higher areas, like for example the 132.85, which marks the highs of the 7th of March and the high of the 28th of intraday swing high of the 28th of February. So very good potential area of resistance, but only if we see a push above the 132.10 level again, and like I said, only then we will target these higher areas. For now, because given that we're quite extended here to the upside on the 4-hour chart, we may see maybe a deeper correction, maybe even actually correction back down towards the pivot, which was around the 131.45 level, approximately there, and then maybe another push higher. But then again, like I said, it's a very tricky one right now for us. Let's say in order to consider maybe further declines, at least in the short run, we would like to see another drop here below the 131.25 level. This way we could then target the recent lows here, should I say even today's lows, which were around the 130.60, and of course if the 130.60 fails to withhold the rate from dropping lower, then yep, further declines are possible, especially if we see even a drop below the 200 EMA here on the 4-hour chart. For now, that's the situation here. Keep your eyes on the today's R1, which is around the 132.10. A nice good push above that. We could then see a continuation here to the upside towards the 132.85, which also is a very strong potential area of resistance. But if this decides to drop lower and decides to retrace all the way below here, below the 131.25 level, now this is where we will examine the 130.60 or even actually further lower levels. So for now, that's the situation. It's a very interesting pair. Let's see how this is going to play out. And again, the same story. Be very cautious with the pound, especially like I said this week, and always have your stop loss in place, guys. I mean, it's better to be safe than sorry. Okay, guys, I hope you found it useful. Thank you very much for watching and listening. And if you want to join me tomorrow morning in my Trader's Espresso, and that's 7 o'clock GMT time. But for now, I hope you have a wonderful evening, and I'll see you tomorrow. Bye-bye.